For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you very much, Brandy.
So you've talked on past segments about the movements of the dollar. Now, recently it seems to be showing some signs of life after being pretty quiet for the past several months. What are your thoughts on that?
So let's start with defining the dollar index. This is really crucial for people to understand as far as what it's being compared to. And so there's the trading partners, which would be like Europe and Canada and Australia and Japan. So those currencies are kind of in a category. The dollar is over here as far as a separate category. And basically what we look at is the dollar going up? Is it trending sideways? And it has been, as you indicated, trending sideways for quite some time. But in the very short term, the last couple of weeks, we've seen it moving upward. And this could be a really important variable. Now, what's caused this is probably as important as anything, and that is the United Kingdom. If you look at their currency, which is the pound, it has really been roughed up lately. Concerns about inflation, concerns about supply shortages. And again, what this usually translates into is that as currency goes down, other ones go up. And right now what we're seeing is the dollar seeing some appreciation.
All right, so what exactly could we be looking at?
So the chart that I brought is going to give people a really nice visual as far as what we're looking at. What's circled there is going back to 2014, and you see that huge rise as far as the blue line going up. That's what took place there was quantitative easing from the crises in 2007, 2008, 2009, and the government intervention. And what they're announcing as far as in 2013-14 was that they were going to stop pumping so much money into the economy. If you look at the far right, you see that blue line is trending up short term, kind of breaking out of this pattern.
All right, so what implications does that have for other financial assets?
So the two biggest would be bond yields. So again, most people, when they think of bond yields, they want higher yields. That's if you're a saver, that's what you're looking for. And again, that's going to really be difficult as far as people borrowing money and corporations borrowing money. Commodity prices are the other big item as far as to focus on. When interest rates and the dollar is appreciating, generally that's a very deflationary type of environment, which would equate to corn probably locally as far as a commodity, just to give an example, might be getting hurt a little bit through that, as well as oil getting roughed up as far as through that period as well.
If you missed any of our discussion, we'll make it available for you on ourquadcities.com.